Hello, everyone. Welcome to Money Minutes. This is Zak Gardezy. I'm the founder of Wealthstone, a private wealth management firm based out of Scottsdale, Arizona. I'm also a certified financial planner. So, on today's episode, I'm going to recap a busy earnings week, which featured some of the tech industry's biggest names. Lots of AI updates and a brief update on the economy and what the Federal Reserve may do with interest rates when they meet next Thursday. So, let's get right into it. Okay, so to kick things off, I want to talk about the latest earnings data. So, I normally don't release Money Minutes this late in the week, but I hosted an event which was both in person and live streamed on Wednesday, and it included an economic update, an update on the private markets from Blackstone and iCapital, and then a presentation I provided which was titled How Will the 2024 US Election Impact Your Wealth? And for those of you who attended, thank you for investing your time, and I appreciate all the positive feedback. However, delaying Money Minutes this week sort of worked out because really so much happened this week, and today's video really helps just bring it all home. So, we had some really big earnings updates. Apple, Amazon, Meta, Microsoft, AMD, Intel, and Alphabet all reported earnings this week. With the exception of Intel, all of the stocks mentioned beat their earnings per share and revenue forecasts. And even though Intel missed analyst expectations, uh, in regards to earnings per share, they had a big reason for that, which was a major restructuring expense as the company looks to cut costs and improve its margins. Now, the stock did have one of its best days in months as it provided investors with a better than expected earnings guidance for next quarter, and sales numbers are improving across the board, and really progress is being made on cost cutting efforts. So there's still a long road ahead for the troubled chipmaker, but the progress they're making led to a really positive reaction from Wall Street. Now, for some of the other names, such as Meta and Microsoft, although they reported strong earnings numbers, once again, investors became worried or nervous about just how much these companies are spending on AI. Meta, Microsoft, and Amazon reported record levels of spending on AI hardware and technology, and so that they expect to spend even more next year. And the biggest concern for investors, especially those that are, in my view, making a mistake and focusing on the short term, are concerned about the profitability of these AI investments. The seven stocks on the screen, which all reported earnings this week, they make up about 28% of the entire S&P 500. And what was the common denominator in all of their earnings reports? Artificial intelligence. Whether it was record levels of spending on AI hardware and technology, or in AMD and Intel's case, record levels of selling products related to AI. Now, this is the direction the market is going, and really, it's the direction the world is moving in. Here's just one example. Andy Jassy, the CEO of Amazon, who followed after Jeff Bezos, he expects Amazon to spend $75 billion on CapEx in 2025, with a large part of that being spent on AI. And Andy described this technology or this investment really by saying it's really an unusually large, maybe once in a lifetime type of opportunity. Microsoft, Meta, and Alphabet also reported, expectations of more AI and CapEx spending in 2025. And just lastly, on the topic of AI, NVIDIA today was announced to replace Intel as part of the Dow Jones Industrial Average. Another sign of the dominance and transformational technology AI will continue to be. As I always say to clients, whether we're talking about the Fed or we're talking about politics or the companies that we're invested in, follow the money. Now, these companies who have market caps that are larger than the GDPs of most countries, in my view, are not going to collectively make such large investments in a technology that will fail. And for us at Wealthstone, we've remained large cap growth focused and especially tilted towards artificial intelligence as top players. And as I've discussed in my latest reviews with clients, I'm looking to continue that focus into 2025 as well. And although the stock movements for some of these companies after earnings were a bit mixed, if we just take a step back and look at the bigger picture, it's clear that we're positioned in the right part of the market. Okay, so what's happening with the economy and the Federal Reserve? So the Federal Reserve is meeting next week, and we've got a whole lot of different data points that just recently came out that helps gauge what the Fed's next actions may be. Now, we're nearing that point of the year where everyone's attention has shifted away from the Fed and to the election, and rightfully so. And unfortunately for me, and I'm sure many others, our text messages are just being completely blown up with election related texts, and our minds are just focused on what's going to happen on November the 5th. But I just want to shift our focus back to the economy and the Federal Reserve for a moment, because they are going to make a decision on interest rates on November the 7th, just a couple days after the election. So, in my view, we've basically locked in a 25 basis point rate cut from the Fed next week. So, PCE, which is the Personal Consumption's Expenditure Report, and is the Fed's leading inflation gauge, it actually increased for the month of September. Now, although it increased, it's still quite close to the Fed's 2% target, with a 12-month reading for PCE coming in at 2.1%, and the core reading, which strips out food and energy, coming in at 2.7%. Now, the silver lining here is that the increases were modest, and other factors such as consumer spending and personal income came in higher than analysts forecasted. Now, moving on to the labor market, which is another strong gauge for the overall health of the economy, the data is out for October, and the US added only 12,000 new jobs for the month. Analysts were expecting 110,000. So the results were significantly lower than what was expected. But it mainly was because of hurricanes and some of these labor strikes. Now, nonetheless, it was the least amount of jobs added since December of 2020, when we were in the midst of the pandemic. Now, unemployment this time last year was 3.8%, and it's now at 4.1%, which again supports the Fed's notion that the labor market has weakened, and this, along with inflation nearing 2%, is really part of their justification for rate cuts. Now, lastly, third quarter GDP was released, and it came in at 2.8%, which was also lower than what analysts were forecasting, which was 3.1%, another sign of a slowing economy. Now, the market is really being propped up on AI in hopes that the Fed will continue to cut rates. And as I mentioned in the first part of today's video, the AI optimism and outlook remain strong, and the factors that are fueling interest rate cuts also remain strong. So, and if we look at the CME Fed Watch tool, which tracks the market's expectations for what's going to happen with interest rates, there is almost a 100% chance of a 25 basis point rate cut. And also, if we look at December, there's over an 80% chance of a 25 basis point rate cut in December as well. So I looked through all the way throughout 2025 and noticed that by the end of 2025, the expectations are that we're 125 basis points lower than where we are today, which if we kind of calculate and figure out how many more rate cuts that means 25 in November, 25 basis points, 25 basis points in December, and then 75 basis points throughout the year of 2025. So how often that happens or what months those rate cuts happen, it's completely up in the air at this point. And quite frankly, whether or not those cuts even happen isn't locked in. It really depends on what happens with inflation. If we continue to get some hotter than expected PCE reports like we did in September, that could reduce the number of rate cuts we get. And as I mentioned earlier, it's really all about AI and what's happening with rate cuts that's fueling this market right now. And so this concludes this week's episode of Money Minutes. Thank you so much for tuning in. And as always, if you have any questions or would like me to review your portfolio, please don't hesitate to reach out. Thank you very much.